Want to live a long and happy life? Easy. Just avoid these dangerous situations. Throw out your bed. Falling out of bed kills 450 people annually. Of course, always watch what you eat. And eat from. Never use a vending machine or even stand close to one. They kill 13 people a year. And ants? They cause 30 deaths per year. So if you see ants, run. But not too fast. 6 runners die per year during races. So stay indoors, but try not to move. 18,000 deaths occur from accidental injuries in the home. Baths alone kill 340 people. Oh, and not to mention heart disease, respiratory illnesses, stroke, cancer, and unintentional injuries. If you're able to avoid all this, you will greatly increase your chances of living a long and happy life. The truth is, the only way to protect yourself is to make sure you can provide for your loved ones no matter what happens, even if you're one of the 130 people killed by deer. Life insurance is the safety net that protects your family financially if you can't be there to support them. A life insurance policy provides a lump sum of money that is paid to your beneficiaries upon your death. The money can be used for lost income, funeral expenses, bills, funding a child's college education, and more. Whatever you need, there's a policy right for you. Term life insurance is coverage intended for a specific period of time, typically from 5 to 30 years. Whole life or permanent life insurance covers you for life and includes a savings component that helps grow tax-deferred income that, after time, can be used as a loan, to pay premiums, or as added death benefits for your beneficiaries. Term and whole life insurance policies require a medical exam, but there are also no medical exam life insurance policies that can be secured in as quickly as 24 hours. Interested in learning more about life insurance and why you should have it? Visit our Learning Center or FAQ page. If you're ready to get started or have questions for our life insurance representatives, fill out the form below for a free life insurance quote today. Then, celebrate your new security by going to the beach. Sharks only kill 5 people a year. Less than all these things.
Hi, my name is Mark Chandick, and I'd like to spend a few minutes talking to you about the basics of life insurance. The purchase of life insurance may be one of the most important decisions you ever make in your financial life. However, it's a decision that most of us will put off until something happens that hits close to home. That's really not too surprising, since we all have a built-in mechanism that avoids thinking about death. But that kind of procrastination can be devastating to a family or business. Let me explain. There are 3 basic questions to be asked, and they have to be asked and answered in the right sequence, or all the answers will be wrong. The 3 questions are: do I need life insurance? How much do I need? What kind should I buy? Let's take them one at a time. First, do I need life insurance? The quick and easy answer is that if someone will suffer financially when you die, you need life insurance. That could mean your family, perhaps aging parents, or maybe even your business partner and employees. Sometimes we might be inclined to say, well, they'll be okay, and maybe that's true. But it's important to remember that we don't get a chance to change our minds once we're gone. We need to face reality while we can do something about it. The second question is, how much should I have? Some experts recommend a rule of thumb that runs anywhere from 5 to 20 times your annual income. Obviously, with that kind of spread, the rule of thumb isn't very helpful. So how do you determine if you need $100,000, $250,000, $500,000 or more in life insurance coverage? The best way to figure out what you need is to have an insurance professional conduct what's called a financial needs analysis. Here's how it works. You'll start by gathering all of your personal financial information and estimating what your family members would need after you're gone to meet their financial obligations. To calculate this figure, you'll need to think through 3 types of expenses. First are immediate expenses, such as funeral expenses, uncovered medical costs, taxes, and outstanding debts you'd want paid when you die, such as automobile debt and credit card bills. Second is ongoing expenses, which is basically money for your family to live on for a specific period of time. It help pay for everyday living expenses like food, clothing, transportation, mortgage, or rent payments. And finally, life insurance proceeds can be used to fund future expenses, such as money to fund a college or retirement savings plan. After you've figured out your family's needs, you'll then want to tally up all of the resources that your surviving family members can draw on to support themselves. This would include things like your spouse's income, savings you've accumulated, and any life insurance you already own. The difference between your family's needs and the resources in place to meet those needs is your need for additional life insurance. Let me share a story with you that illustrates the value of properly calculating the need for life insurance in a very powerful way. Early in my career, I was working with a physician in Southern California who was very busy and didn't give me any time to help him determine the amount of life insurance that was appropriate for his family. Rather, he asked me to simply sell him a $500,000 policy. I complied with his request, only to read several months later that he had been killed by a hit-and-run driver while changing the tire on the side of the freeway. I took great pride in being able to deliver the much-needed cash to the family, only to be shocked to learn that the doctor had 9 children, 3 of whom were in college at the time. I distinctly remember sitting in a room with his wife and all of his children when they collectively asked me, "Is this all there is?" I felt badly that I hadn't found some way to break through to the man and convince him to approach the process the proper way. I vowed never again to shortcut the process and to always calculate the real need for life insurance. I never have shortcut the process since, and you should neither. There are no do-overs with life insurance. There's nothing more important than buying the right amount of coverage, and you need to get it right the first time. So after you've figured out how much you need, you're now ready to focus on what kind to buy. There are 2 fundamental considerations that go into answering this question. First, how long will you need the insurance? And second, how much money do you have in your budget for this expense? The how long you need it question will help you decide if you want term insurance or permanent insurance. Term insurance lasts for a specified period of time, say 5 years or 10, 20, or maybe even 30 years. If your only need is for funds to pay off a 20-year mortgage at your death, a 20-year term policy would probably be the answer for you. Or if you're concerned about providing funds to take care of your aging parents in their later years, a 5 or 10-year term policy might do the job. The shorter the period of time the policy lasts, the lower the premium. But once the term period is over, you'll have to pay a considerably higher price to maintain it if you want to do so. And you may well have to take another insurance physical to qualify all over again. That means your health must still be good and that you haven't taken up piloting, skydiving, or vehicle racing. Declining health or a dangerous job or hobby can significantly increase the cost of insurance and sometimes can make coverage unaffordable or even unavailable. That leads me to the second kind of insurance, permanent insurance. Permanent insurance is what the name implies. It's with you for life, no matter how old you are when you die. The premiums are projected to remain level over your lifetime, and in some cases can be designed to stop at retirement while your coverage remains in force for life. Permanent policies build a cash surrender value that is available if needed in the event of emergencies, opportunities, or college for the kids. Of course, these benefits come with a price. The initial premium for permanent insurance is 3 to 10 times higher than it is for an equivalent amount of term insurance. So if your budget is limited, be sure you buy as much as you need, even if it's all term insurance. But if you have some room in your budget, it usually makes sense to include some permanent insurance in your program. And as time goes on, it will probably make sense to convert some of your term insurance to permanent insurance. You know, one of the biggest mistakes I see my clients make is underestimating how long they'll need life insurance. This was painfully true immediately for many after the dot-com bubble burst in 2000. All of a sudden, you had people who experienced a significant loss in their retirement assets, and they were no longer able to retire on time. Life insurance fills the financial gap that exists between your financial needs and your financial realities. The fact that people had to work additional years necessitated owning life insurance for a longer period of time, and many were caught unprepared. By owning both types of life insurance, term and permanent, you're better prepared for the unexpected things that happen in life. Let's face it, our financial lives never go as smoothly as the financial press would have us believe. So far, we've looked at life insurance from the context of your personal needs. However, life insurance is a tool that is also utilized by almost every small business in America. Businesses, especially smaller, closely held businesses, utilize life insurance to protect their companies in case of the premature death of an active owner. Life insurance is used to purchase a deceased partner's interest and provide an income stream to the surviving family. Life insurance also may be left to the company to provide a financial cushion to the company in the case of a loss of an active owner or key employee. Life insurance is also utilized to provide cash to equalize the inheritance of a family, where only one of the children inherits the company. And finally, to provide cash to pay federal estate tax, so that the company doesn't have to be sold to pay the tax liability. These uses of life insurance keep businesses in business, families financially secure, and Americans employed. So there you have it. A properly designed life insurance program is as essential to a sound financial plan as a strong foundation is to a home. Do it right, and the future is secure.
Level Term Life Insurance. Purchasing level term life insurance from Credit Now UK can help you to build a policy ideal for your life circumstances. This type of life insurance provides cover at a level rate. This means it will be worth the same amount throughout the lifetime of ownership. The value of the policy does not change over time. It does not rise with inflation or any other type of measure. For many individuals, this type of cover is ideal. Keep in mind that this type of life insurance is also a term policy. This means that the policy is in effect for a specific length of time as defined in the policy terms. If you do not file a claim during this time, the policy simply expires. You will not be able to make any claim to the policy after its expiration. Term life policies like this only pay out if the covered individual dies during the time the policy is in effect. Do not overbuy, but purchase enough to ensure your family has the financial protection necessary to prevent them from living without a home, or under significant debt, should you die untimely. Do not cancel a life insurance policy, unless you are sure your mental and physical health are no worse than when you selected the policy originally. More importantly, do not leave your family without protection for any length of time. You can have more than one life insurance policy.
Hi, I'm George Volman, your automotive insider, and tonight's subject is credit life insurance on automobile loans. You know, this is a continuation of our series on aftermarket products that you may want to consider when you purchase that new or used vehicle. Life insurance is self-explanatory. The insurance policy covers the person or persons named on the loan documents and pays the vehicle balance to finance off in event of their death. You know, depending on the insurance companies, there may be several health questions that you need to answer, and the cost of the insurance policy is a function of the term and balance to finance. This is similar to a standard life insurance policy. Generally speaking, the short-term lease of 24 months has the lowest charge for this coverage. Is it worth it? You know, my father passed away at the very young age, and his brand new 1968 Chevrolet station wagon was completely paid off. It's worth considering. Log on to our website, theautomotiveinsider.com, for additional information on life insurance products. Until next week, I'll see you down the road.